So here we go, let's get back to some proper videos. US portfolio review for September 2023. This is where I do my update every 3 months on the YouTube channel to show you how everything's going. If you do want to see more regular updates, so one every month, then go and join the Patreon. That's where I do a regular monthly update rather than waiting the 3 months on the YouTube channel. And as well as that, I'll drop you 2 exclusive videos a week to say thank you for supporting the channel, and it's only £5 a month as well. And I also post what I'm buying and selling in real time on there as well. But let's get on to the US portfolio and see how it's all doing, because it's been a while since you guys have seen it on the YouTube channel. Now obviously this does not include stocks that I've sold. This is currently all the active stocks that I am holding at the moment. Starting off with my first portfolio, so sometimes people don't realise I actually have in 2 different portfolios just to split the money up a little bit to, if anything was ever happens to some broker that I have my money in, just a little bit of protection. Sometimes people don't wait long enough to see the other portfolio, and I saw when I did my UK portfolio the other day that people didn't realise that was my UK portfolio. So that's my third portfolio that I keep separate. So this is my US holdings. All my US holdings are in this one, because I'm sure there'll be someone going, oh, where's National Express, where's Mobico Group in this portfolio? This is US holdings, okay? So this is the first portfolio. So Alibaba, that's the first position up here. I've held shares in Alibaba now since I think 2018, so like 5 years-ish. I started buying this stock in 2018 when the China trade war stuff were going on. And then from that situation, the stock went up a lot. I was up over 100% in Alibaba. Shows you how much it's been killed, because since that time frame, I'm now down 23% on that position. I did sell out half my position for 100% profit at the time frame in 2022, which was very good, and I'm happy I did that, because if I didn't do that, I'd be looking at it now going, I've had this stock for 5 years and it's done nothing. So that's why I always like to trim positions. Even if I still believe in it, I still like to trim positions that I'm up on, just in case that situation happens. And obviously that was the right decision. But now I'm looking at Alibaba down 23%. I'm like, this is crazy. I can't believe it's this low. But I'm generally looking at Alibaba now, and I've been actively buying again. I think the last earnings were good. Good EPS beat, revenue growth was strong. I'm expecting high single digit, but they came with 14% year over year. I think when they split up all the different parts of the business, I think the government aren't going to be as harsh on them now. I think they'll do okay. So I'm looking at Alibaba now, and I'm nibbling some shares. I do have some in my other account, which you can see here as well. So I do have 2 sets of Alibaba shares. So yeah, I'm pretty happy with how it's going, and I think it's a good value. Carnival down 37%. For you guys that might be new around here, I've held Carnival for once again about 5 years-ish. Unfortunately, I bought that before the whole CV situation happened, and unfortunately I'm down on that position, and I think I'll still do okay. I think cruises are coming back really strong, and I think I'll still make some form of money out of that. Obviously not what I originally wanted in 2018, but I think I'll still do okay. Meta, which I'm up 81% on. So these shares I've held in Meta for around about 5 or 6 years. Started buying around the Cambridge Analytica stuff, and just a stock that I never really want to sell. It's never crossed my mind to sell Meta, because I still think in many years we'll be still using WhatsApp, Instagram, Facebook. So for me, that's one of the stocks in my portfolio that's kind of always a buy and hold, really. So yeah, held that for a long time. Gang down 84%. Unfortunately, this has been a bad performer. They never developed into what I was hoping for. I thought I was seeing the company doing quite well through being a UK company, went to a US listing, financials were really good, and then it all just went pear-shaped 2 years ago. The company didn't deliver on revenue that they said they were going to do, they didn't drive up profit as they said they were going to do, and nowadays the same again, like they're losing contracts now, or they're getting undercut on contracts as well. So for me, I actually would have sold this company now for a loss. The only reason why I'm not selling it is because they did come out and say that they is currently offers to buy the business, and I'm hoping that I can get out with this maybe like a $4, and I'll still be down on this position, but it'll be better than obviously selling right now. So that's what I'm kind of waiting for. But to be honest with you, I am so disappointed and don't trust the management team. I don't know if they will actually sell it for a good valuation, or if they're actually just generally probably not telling us the truth, that maybe they're making this up to try and keep shareholders happy, because that's the only thing they've got left to do now. So unfortunately, a little bit disappointed this one never worked out how I wanted it to, and unfortunately the management team there told us things they were going to do and never delivered on it, which is unfortunately why management teams are so key. So yeah, I'm hoping that they get bought out in the next couple of months. If they don't get bought out by the end of the year, I'm out of gang. So that's why I'm doing that one. Yeah, I bought. I still think Huya is doing really well. The they've still got active users. Unfortunately, they've been hit by a lot of restrictions by the Chinese government, restrictions on new game releases, how much you can tip with the streamers, obviously the advertising impacts as well. A limitation on younger people being able to game. They've had like 4 different whammies on it, and you know, as an investor, you're always like, there could be something that goes wrong, but you never think there's going to be 4 things that go wrong, which is devastating. So they've had a bit of a bad year with the revenue growth, but they've actually still done very well on the profitability front. So I'm hoping that once things level out and they've just done a big buyback, the buyback will start kicking in. They'll go back to driving up profit, driving up revenue growth, and I still plan to hold it because I think it's still a very good company. It's just been very unlucky with the regulations that are being slapped on it by China, unfortunately. JD.com. So I've owned JD.com for around about 5 years, 6 years. Same again, a bit like Alibaba. I bought in the kind of whole Chinese fear, which was around this time frame here. You can see 2018ish. I bought this stock at the peak. I was up on this stock around 400%, as you can see here. I was at the peak. I was up 400%, and I actually sold about half, 3/4 of my JD.com position. I was selling out at like 300% profit, and then since then the stock has gone down a fair amount, unfortunately. Once again, Chinese regulations being slapped on it, and the stock has retreated since. But at the end of the day, I can walk away saying I took good amount of profitability on it, which I'm really happy with. And I do look at it now and I think, you know, do I buy more shares? Like I really do. I've been averaging up even more on it at the moment, and I'm thinking about buying more shares on it because I think it does look a bit attractive valuation. Microsoft, I've had this one for 5 or 6 years in this portfolio, up 201%. Yeah, this is very much like a Meta. I just see Microsoft being, you know, very successful for many, many years, and I have no plans to sell it. Pinterest, I'm up 5% on the Pinterest. I've been waving about maybe selling out Pinterest. I look at the expenses and I feel like they should be doing levels of profitability that Meta is. But I look at Pinterest and they still have a lot more growth they could potentially do. It's still got all the shopping that it can put into platform, the international expansion. It doesn't have the kind of controversy around it like a Meta and Instagram and all that. So it's very unique in the social media space, and that's what keeps me in the stock. But I do get a little bit frustrated because I do feel like they should be ramping up profitability a bit more than what they are. TDoc, I'm down 79% on this position. I've not been buying for a long time because I feel like they haven't been doing a good job, but recently they've been stepping it up and I've been a bit more impressed with the financials they've been bringing out. And looking at the free cash flow that they could be doing in the valuation, it actually doesn't look too bad. So I've been in a bit of a place at the moment going, if it keeps on improving, do I start averaging down on that position, or is it better to take the loss and then move that into another like telehealth service stock that I own, which is Hims? And then if Hims goes on to absolutely smash it, obviously I'll make up that money from the loss I would take, and maybe even more potentially. Is it better to kind of move that money into TDoc, into Hims? I don't know what you guys think on that one. That's something that I've kind of been considering there. Visa up 45%. I've owned this one for around about maybe 4 years-ish. Same again, that's a buy and hold forever kind of stock for me, as far as I'm aware. Disney, I've been having a lot of thoughts. I get asked about Disney a lot and what my current thoughts are. Last weekend I had a good think and a good look into Disney. I've decided that at the moment I'm happy to hold, and I'm probably more to the side of actually being a buyer. I'm actually thinking about doing a total dedicated video on Disney and why I've come to that conclusion, because it would be a lot longer than what I can sum up in the next minute or two talking to you guys. But ultimately, my overall thought process is if they keep the revenue up, with the parks, they profit from the parks, but then they add in a profitability level like Netflix to the Disney Plus platform and still grow it, then the profitability would be actually really good, and then it'd be quite an attractive valuation. And that's what I think ultimately I was kind of getting to with it. So that's that portfolio. We're getting on to the second portfolio now. So once again, we've got Alibaba. I won't talk about that one. Google's been on a fantastic run recently. This one has seemed to really have woken up. This was a priority for me to buy this stock around the kind of $100, $90 mark. I was buying. I wanted to actually make Google my largest position. Unfortunately, it wasn't down here for long enough, so I wasn't able to do it. But I did get a good chunk in there, as you can see, so that's good. Google's a fantastic company, probably one of the best balance sheets in the world, probably one of the best companies in the world, and it seems to have started to rally up a little bit now, as you can see here. So this has been a really fantastic buy, and just a little bit gutted I weren't able to buy more shares in it. Beyond Meat down 88%. Unfortunately, this is one of the stocks that really let me down in 2021, and is probably In my portfolio, there's only 2 stocks that I'm not a fan of in this portfolio, which is Skills and Beyond Meat. Those are 2 stocks. I actually probably gang. Those are the 3 stocks that I'm really disappointed with and their performance, and unfortunately, those are 3 stocks that have kind of overhanged my poor 2021 performance. But it's as long as I can solve them sort of issues, I think the portfolio is looking really good. And Beyond Meat, they just, when you look at that, obviously you were hoping the partnerships were going to deliver more than what they did do. Obviously, it looks like there's a lot more competition now. It looks like gross margins are being impacted. It looks like the whole kind of vegan, vegetarian movement has not took pace as what it looked like it was going to do. And Beyond Meat are just doing disappointing numbers themselves. So, especially the last update was really poor. So, if they don't improve in Q3 and Q4, I'm actually going to sell out of Beyond Meat. So, we'll see what happens, because otherwise, if they don't, they're going to run out of cash. So, I'm going to give that probably another 3 months maybe, and then I'll probably decide. So that could not be in the portfolio much longer, and it would mean taking a bit of loss on that one, which is disappointing, but it happens, unfortunately. Corsair down 38%. I think that should really start coming back in the next kind of couple of months. Gaming looks like it's taken all its hard comps and hold the whole inventory issue, and looks like a few good games coming out as well. So I'm thinking Corsair should be in a good place going forward, so I'm looking forward to how that's doing. The King, all these prices are actually taken from Monday, is when I did this, set up the portfolio review, and DraftKings is actually, so I was up 6%, but I think it's had a couple of good days recently, so I think it is up a little bit more than this. But obviously this is really good, because I remember the times where I was down like 50% on DraftKings, and obviously now it's up, which is fantastic. And I'm excited where it is. This stock I plan to hold for at least the next 5 years. It could be the next 10 years. It's the stock that I'm most bullish on in the stock market. Sports betting will be insane in the next 5 years, and as you guys know, I've covered it many times on the YouTube channel. I'm really excited with how it goes. I think the only thing that I probably changed since you last saw, I did trim the position slightly because it was such a big position. But apart from that, I'm looking forward to where it is. Note worth putting in is the first start of the when it comes to Q3 of DraftKings, it can be really volatile because there's not that many games in the NFL, so the hold can be very one way or the other depending on the first 3 weeks of the NFL that happens in Q3. So far started off really good. Last night was the first night of the NFL season. The Chiefs were on and they lost, and they are the Super Bowl favourites, so that'd be very good for DraftKings so far, so that's looking good. EHang down 49%. Most of you guys know this is just a high risk play. I've got 2 high risk plays in my portfolio, one which is Planet 13, one which is EHang. This is just one of them to get exposure into the MJ space, and if MJ does very well in the US in the next few years and is legalized, that will do very well. And also EHang is if drones are allowed in China or even worldwide, these guys are the #1 leader in drones. So those are the 2 high risk positions. That's kind of like boom or bust. They'll either go to 100%, down 100% and go bankrupt, or there'll be stocks that go absolutely bonkers in the next 5-10 years. So that's just a little bit of fun that I have with a bit of smaller money, and EHang's there down 49%. Meta up 52%. So these are the shares that I've bought a lot more recently than the ones that are in the other portfolio, but still doing very well, up 52% on them. Topgolf Callaway down 23%. Their last quarter was a little bit disappointing for Callaway standards. Topgolf were good. The problem was that golf equipment and the actual leisure wear was a little bit poor. But I still think it's a good business in the long term. I think more and more Topgolf venues will do fantastic. Hims. This stock has been absolutely devastated. Like, I knew it was going to have a bit of a pullback from here. That's why I was trimming my position. But I didn't think it was going to get hit this much. I didn't think it would go to this sort of valuations. And you start getting to the point where you're like actually questioning yourself. Like, you're like, why are Wall Street selling it off so much? Like, the last quarter was fabulous. Like, it was one of the best earnings that was in my portfolio. Beat on EPS, beat on revenue, hiked on outlook, and then it was like down. It's down that much since earnings, which is crazy. And I'm just like thinking, does Wall Street know something that I don't know? It's crazy how cheap it is. And it's like at the point now where thinking like, that's what I'm saying, like, do I shift off the Teladoc position? I know it'd be a big loss that I take, but realistically, if I just put that into HIMS, will I recoup the losses and maybe even more in the next few years by buying more HIMS right now? It's crazy what's going on there. Imp mode, obviously I've held this stock for around about 3 years-ish now. just over 3 years. Started buying in June 2020, around $15. Obviously, as you can see here, the stock is actually up 151% since I bought it. But I've been averaging up. Because even though for me, it's not about having a portfolio. Look, I got this stock up 151%. It's about making money. And for me, I just keep, especially in this time frame, I'm buying if it's dropping, because for me, I just think the upside is just getting bigger and bigger, because the growth that they're doing profit-wise, revenue-wise, is just absolutely crazy. And realistically, since 2013, this stock actually hasn't done much. It's only up like 8% so far this year to date. Actually, if we do this, it'll be easy. Yeah, 8.14%. It's crazy. Like, this company has done fantastic this year, growing at 20+% in the profitability, and it's 17 times in. It's absolutely crazy. So, yeah, I mean, I love in mode. I think it's still got plenty of upside, but I would like to get it cheaper if I am going to buy it, to be honest with you. Point 13, I mentioned Mercado Libre. This stock has been on fire. It wasn't too long ago that I was looking at Mercado Libre and I was like, this is one of the best companies I own. It's absolutely on fire. Like, I need to make this a bigger position, and I've been trying to make it bigger when it does have a couple of dips. Like, here it had a 12+ dip out of nowhere, and obviously since that time frame it's rallied up even more, up 28% since that time frame. And I did buy some shares in that time frame for Mercado Libre. I think it's a fantastic company, and I keep thinking I've got to make it a bigger position, and I am at a place where I look at that and go, that's a lovely position size for that one. I'm excited for that, what Mercado Libre does. SoFi up 37%. I keep averaging up every so often on SoFi, but at the point I'm like, I really like this one as well, but I'm thinking, can it have that like day where it drops 10-20% out of nowhere, which I think it can do, and then I can buy it back in the like $6 range, $5 range. That's what I'm kind of waiting for. So yeah, I've got shares in SoFi, and I keep averaging up, but I keep waiting for them sort of dips so I can buy some more shares, because I do really like it. PayPal, we're down 17% on PayPal, which isn't too bad considering the pain that it's been through. I keep trying to buy more and more shares in it. I think that's incredibly undervalued at the moment. Shopify down 4%. They're doing very well again at the moment. Block down 50%. I've been thinking about buying more Block, but to be honest with you, I think I can't buy more Block when I think PayPal's a miles better valuation. So that's just holding there for me at the moment. Skills down 69%. Like I said, there's 3 stocks in this portfolio I'm not happy with, which is Gang, Skills, and Beyond Meat. So Beyond, like as I said about Beyond Meat and Gang, Skills, I'm giving them one more year to start trying to sort themselves out. I don't think it should be down as much as what it should be. It is right now, because it's not like it's going bankrupt. But the revenue growth is just absolutely, there isn't revenue growth. It's in decline. They're trying to cut the marketing spend, which is hitting the revenue growth. But once they kind of balanced it out, they've got enough cash for like 6 years, and hopefully they can kick on and actually start making some decent games again, and that starts dragging in better revenue and profit performance. And I'm still surprised on about advertising, moving more towards advertising, which isn't happening at the moment. So yeah, with Skills, giving them a bit longer, but they need to start doing something. Otherwise, I think I'll just kind of take the loss, I think, with that one. And that leaves us with Disney, which we talked about, and Walgreens, which is down 23%. Obviously, a lot going on at the moment with that surprise exit from the CEO. But the big thing is, like, I know there's a big turnaround to still happening in Walgreens, but at the end of the day, it's now 5 times earnings. It pays something like an 8% dividend yield. If I click on here, where's the dividend? 8%. So even if I cut the dividend, like, that's still going to be really attractive. So yeah, there's still a lot to turn around with Walgreens, but the thing is that I'm getting at the valuation where I go, I'm okay buying at least at those, because it is priced as though it is going to have to go through a big turnaround. So yeah, we'll see what happens with Walgreens. I've been very cautious because there's still a long way to go, and I'm not diving in like full pelt on this one, because there still there has to be a big financial turnaround in this one at the moment. But for what they have to do for where the valuation is, I think it's quite attractive. So yeah, that's the portfolio, guys. There's only 2 stocks that I'm kind of watching. So I'm watching Nike at the moment. I think that's a fantastic company. I'm normally very nervous with the fashion space because I don't think there's much loyalty, but that changes with Nike. There's definitely loyalty with Nike. The only thing is it's on a big dip at the moment, but it's getting it at the right sort of valuation. And the only other one that I am considering is Etsy. Etsy is on a massive dive at the moment. If we actually just have a quick look at Etsy. So it's even down 2% today, now down at $67. And you can see here, peaked around 20 in November 2021, peaked at $274. Even at January 2023, it was actually $137. So this is one stock that's totally gone the opposite direction to the market this year. But looking at the company, I'm looking at the moment, I mean, it's 17 forward times earnings. It's about the same sort of, PE earnings there as as an eBay, which is obviously a very good comparison. But the difference is that hopefully they ramp up profitability a lot more than what eBay is, and also if they can go back to good amounts of growth. I mean, even this year they're actually forecasting 7% growth, and next year they're actually forecasting 9% growth. If they're doing like high single digit growth like that, and obviously the profitability is ramping up like this as well, 17 times earnings, I think that's quite attractive at these sort of levels. And obviously if it starts going into the 50s and 40s, that's where I think it comes really attractive as well. So I might do a full video on that at some point, because that's one that I am quite interested in. So yeah, those are the only two stocks that are looking close, that I could high up on the watch list that could come in, but we'll keep on watching them anyway. So I hope you enjoyed the portfolio, guys, and yeah, let me know what you think anyway. And if you could hit that like button, that's absolutely amazing, and I'll see you in a bit.